Hey, it's Similoli here, and in this video I'm going to show you these two things that I do to maximize my trading profits. Whether you trade cryptocurrency or equities, futures or options, whatever it is you trade, making profits is not as easy as it looks. For one thing, you got to be able to manage your risks. No point making $200 today and losing $500 tomorrow. But I'm going to show you two things that I do when I'm trading to ensure that I get maximum profits. So let's get right into it. So here I have a chart, and it's a 15-minute chart, and it's on a stock that I have traded over the past few weeks. So I'm familiar with its movements, its ups, its downs. And that's one thing that's important when you're day trading. It's important to get a little familiar with the nature of the moves of the particular equity that you're planning to trade for the day. So this gives us a bird's eye view of how price action traded through a trading day. So the day starts off with the two red candlesticks, but between this red candlestick and the next one, we can see that there's a reversal in trend. So the trend now has reversed at this point. So at this point, I would like to draw a level. And then we see price action trending up. Now this is the highest point it attains within this day period. So I'll draw another level there. Now within this period, we have some other highs and lows. We have lows occurring about here, and I see a nice level. What makes this a nice level is the fact that we have several occasions where the candlestick is touching this area. So it makes it a really nice level. So we have a level there. And I'll draw another level about here, because again, I see these candlesticks coming up to this level and not quite making it beyond it. So what I have here now is I have my two red lines showing the high and the low of the day. And then I have my two white lines just showing an area where price action kind of lingered in between these two areas. And this is the area of consolidation. Now it's possible to have entered a trade right at the point of reversal further down here and to have stayed in that trade all the way to this candle where it makes a nice high. And that would be a really good trade. Now, assuming you've come out of the trade, you've made a tidy sum in the upswing, and you decide to enter back into the trade at some point within this gray area. But unfortunately, the second time around, you can see that there's not that much movement, not that much increase in price action. It just kind of oscillates between the two white lines. Now you have to make a decision as a day trader. Do you want to exit that trade, maybe for a small loss? Or do you want to stay in the trade until the next day and swing the trade? Now as a trader, you would know that holding any position overnight into the next day or over a couple of days always carries an element of risk, because the price action is exposed to so many other external factors. So it's always something that has to be calculated. But I'm going to show two things that I look at to give me that extra confidence that I can make a profit by holding my position into the next day. So now I'm going to leave the 15-minute chart and I'm going to go to the daily chart. Looking on the daily chart, Two things I'm going to look out for to help me decide if I want to risk holding this position into the next day. The first thing is the volume. So right down here we have the volume average. It's the 50-day volume average. Over the course of about 3 weeks, volume hasn't ever gone over the 50-day moving average. It got close to it on this day, but it didn't exceed it. But look at what's going on this day that we're trading. Not only has the volume gone beyond it, it's gone beyond it by an exceeding amount. This is the first telltale sign that buyers have shown up on the scene, and when buyers buy, price increases. So that's the first thing I'd look at to give me that confidence that if I stay in this trade till the next day, there will be enough buying pressure to keep on pushing the price up overnight and into the next day. The second thing I would look out for is this level that I've drawn. Over the past 3 weeks, price action attempted at this point to go beyond this level, but it didn't succeed. It quickly dropped back down below the level. And over the next so many days, this is like a period of two to 3 weeks, price action couldn't even get above this $8.71 level. Until this day that we're trading. So overnight, there was a gap up. It could have been news, it could have been anything that caused this move, this gap up from $8.53 all the way to $9.06. So that move happened overnight. And so just the fact that price action has broken out above this red level that I've drawn here, that's reason enough to hold the trade into the following day. Well, that's all, folks. I hope you found some merit in this video, and if you have, all I ask is that you hit that like button, comment below, let me know what your thoughts are and what other content you would like to see. Share with your friends and family, and most importantly, don't forget to subscribe. Oh, and hit that notification bell. That way you get my content as soon as I upload it. And I'll see you in the next video.